Well, thank you for joining me today at the weekly update. We're going to get right into it. So, quick reminder quarterly chart party. That's our expanded version where we bring usually more than just one chart. We bring usually a ton of charts to try to explain markets, economics, and what we think is going to happen for the rest of the year. So, if you have questions, especially for that one, service@o'harewealth.com, or you can go ahead and text us. But this question this week we got is actually a little bit of an add-on to what we did cover last week. We covered foreign investment opportunities, and now people are asking about the devaluation of the dollar, and do we see that continuing? First of all, let's look at a chart of the U.S. dollar. This is a chart. It's DYX. Roughly, it's showing us the value of the dollar relative to other national countries. So let's zoom in very quickly here. You notice this chart doesn't seem to look like, goes back to the 1970s, doesn't seem to look like a lot of other charts people have seen. Right? This doesn't remind you of stock market charts. It doesn't remind you of bond charts. Honestly, it doesn't even seem to remind you of interest rate charts. It seems to be kind of its own thing. And it is. And this is why this is important. If you look at 1985, that's that big peak there. Remember, Ronald Reagan got together with a couple other developed countries and they signed the Plaza Accords. It was to artificially lower the dollar. Why do you want a lower dollar? Well, we talk about strong and weak dollar, but those are really misnomers. You really want to talk about high and low dollars. High dollars means it's advantageous to buy things from foreign countries. Low dollars means it's relatively advantageous for people to buy things from us. So a lower dollar, great. If you're a U.S. manufacturer or service provider trying to export your service, low dollar is fantastic. If you're an importer or you're trying to buy foreign things or you're going to foreign countries to purchase things, a strong dollar is what you want. So there are different parts of the economy that are helped in different scenarios. But in the 1980s, we had the dollar, spike up drastically, fall drastically, and then spike back up drastically into 2022. The 80s and 90s were a great investment decade. The value of the U.S. dollar is probably more important to other countries than it is to the United States itself. Why do people want to hold U.S. dollars? Either they want to get a great return on their money, so they want that central bank to pay a lot, which right now we relatively are, even though we are in a rate cutting cycle. As a matter of fact, just briefly, remember where did the dollar peak here recently in the last 20 years? It peaked in September of 2022 when the Fed was still raising rates pretty aggressively. And remember, the market, the U.S. stock market, bottomed in October of 2022, right? Because that aggressive rate cycle, people wanted to have U.S. dollars so that they could own U.S. bonds. They wanted to transact in U.S. currencies. So there was a high demand for dollars. This is still a supply and demand game. But the United States has never really been in on trying to manipulate its currency very much. The reason for that is because it doesn't need to. We're not export dependent like most other countries. We're net importers. We net buy things from other people. And we tend to price almost every contract in US dollars, so we don't even tend to save that much even when the dollar does move in our favor. But why is that important? Well, the Chinese have been manipulating their currency for years, and people have been talking about it. Why do they manipulate the currency? They make it artificially low, i.e., artificially cheap, so that it's easier to buy their goods, and it helps their export market. They're heavily dependent on their export market. The Germans with the euro have been accused of doing the exact same thing. Is it helps their export market. The United States, yeah, is the currency down from where it was in September 2022? Yeah, but it's still higher than it was 5 years ago on a relative basis, and it's still higher than it was really for any time in the last 20 years. So is it down? Yes. Is it crushed? No. Is the U.S. economy over because we have a similar level as we did in 2019? No, that's not our postulate. Now, the U.S. dollar index, yes, it's important. It does create some probably bigger effects on certain commodities, but overall, the U.S. economy pretty much functions no matter what the U.S. dollar level is. It really just is whether or not we attract a lot more foreign investment, and we tend to attract a lot of foreign investment when rates are relatively high and there's a strong demand for U.S. currency, i.e., people want to do more transactions in U.S. dollars. But as the world's reserve currency, and frankly, we still are the world's reserve U.S. currency, despite what the BRICS countries get together every once in a while and threaten to do. The U.S. dollar, yes, it might continue to weaken, and it means that that European vacation was probably more advantageous a year ago than it is today. But ultimately, it's still relatively strong. So with that, we're going to conclude. Obviously, if you have questions for next week, chart party, obviously that's a big one for us. We're going to be covering a lot of different topics. If you haven't read it yet, Americana, 400-Year History of American Capitalism, you can see my review here. And with that, I'm going to conclude today's presentation. Thanks everybody for joining me. We'll see you next week.